Today on Think Smart with TMFG, Mike and I are going to be discussing, Mike, is it finally time to buy Bitcoin for our clients?
I'm not sure. I'm not ready to jump on that bandwagon yet.
Mike, Bitcoin is now over $100,000 US per coin.
Pretty attractive, isn't it?
It's very attractive. And the best time to buy an investment is when it's
super attractive, isn't it?
super high, right?
Yeah, that always worked well through the history of investing.
So Bitcoin has had a bit of a rally lately, call it the Trump bump. He is a supporter of cryptocurrency, at least he says he is. Just before he was sworn into government, he launched his own meme coin, which somehow out of thin air created billions of dollars. And it was so successful, a few hours later, his wife did the same and hers was still worth billions of dollars. So I don't know how this money gets created so quickly, but...
Yeah, it's funny. We always talk about Bitcoin is sort of the main one, right? And then there's Ethereum and all these other ones that are, very relative. But whenever I go online, I look to see how many cryptocurrencies do you think there are?
Probably 1,000 now.
Well, last time I checked, there was 11 to 12,000, and some estimates go up to 80 or 100,000, depending on what source you use to find out where they are. Because, as you said, they just kept on getting created over and over again. So everyone creates their own cryptocurrencies. So that's the one problem in there. There's so many to choose from. When you say crypto, it's a very generic type of term, right?
So the thing that I find interesting, so if you think about all that money, let's say $1 trillion when you put it all together, just put all those cryptocurrencies. So a lot of people out there are feeling much wealthier because they've got this $1 trillion.
Yeah.
But it's not $1 trillion in the bank. It's not $1 trillion in investments. It's $1 trillion in a thing that is like the air we breathe. It really doesn't exist.
Yeah, it's funny. I've had a few of my friends have become involved in cryptocurrencies, and it's been very worrisome. It's almost like a cult that happens between them because they get very much into this. And when I ask about the gains are through the roof, of course, right? They're hundreds or thousands percentage of gains, which immediately puts my red flag up because whenever you see that, life is not that easy. That's one thing I've learned. Life is never that easy. And when you hear they invested, a few $100,000, you say, now it's worth $10, $20 million. I said, well, I would get it out. They said, well, you can only take out $10,000 a month, right? So the problem is they have this stuff that's gathered, but they can't get their money out. And with how slow they have the redemption process, it will be bankrupt before they can get even their capital out. So they put these restrictions on this that wasn't originally what Bitcoin or what, I guess, cryptocurrency was meant to be. And this is where I see a lot of the stuff that can go extremely wrong in the future.
So I did a little bit of research on Bitcoin, and I thought I would share some of that with the audience today. We hear about Bitcoin all the time, but does anyone really understand, how many coins there are? How does this whole thing work? So today, there are more than roughly 20 million. There's 19.8 million Bitcoins. Those are circulated around, and so you got to have an address for your Bitcoin. You got to have it, it's got to be somewhere, an email address. So there's 54.6 million. So almost three times as many addresses for Bitcoin. But that wealth is really concentrated. If you just took the top 10 addresses, think of them emails, they own 6%. If you go to the top 100, they own 15%. The top 1,000 emails own 32% of all Bitcoins out there. A third of all Bitcoins are owned by 1,000 email addresses. And if we get to 10,000, now we're talking 55% of all Bitcoin. So Bitcoin is really, really concentrated with a few individuals. And remember, I have 3 email addresses.
Yeah.
You could have 100 email addresses, and that's what people do to spread out their Bitcoin. So no one can figure out actually how many people really hold it. It's not 10,000 holding 55%. It may only be 50 people holding 55% of all Bitcoin.
And that exposes you to market manipulation, doesn't it?
Totally does. You're in control of the market. You can flood the market when you want to. You can pull Bitcoin out of the market when you want to. You've got complete control. And think of the US dollar, Mike. Yeah. How many people own some US dollars?
Yep. Everyone's got a piece.
Hundreds of millions of people own some US dollars.
Yep. And it's it's not equally distributed, but it's distributed as per people's worth, right?
There's not where 100 people own 10% of all US dollars. It just doesn't exist.
Yeah.
So let's go a little further. We talked a little bit about concentration. The average Bitcoin wallet holds between 0.0001 and 0.001 Bitcoin. So they don't own a full Bitcoin, they just own pieces.
Yeah.
When you turn that into market value today based on $100,000, that's between $10 and $100.
Yeah, so that's 1/1000th of a Bitcoin.
So you got all these tiny little people that own $10 here, $100 there, and that's in their wallet.
That's 1/1000th to 1/10,000th of a coin. Yeah.
So you've got a ton of small players that own these tiny little pieces of Bitcoin.
Yeah.
Bitcoin creator Satoshi Nakamoto holds 1.1 million Bitcoin. And remember, there's only 20 million. He owns 1.1, but he owns it across 22,000 addresses, wallets, email, whatever you want to call it.
We still don't know who he is, how old he is.
We don't know where he is.
Is he 80 years old? Is he running the Russian government, or is he in China? We have no idea.
So if he owns 1.1 million Bitcoin, and it's $100,000 US, what's the value of his holding?
Yeah.
It's in the hundreds of trillions of dollars.
Yeah.
He may be the wealthiest man in the world on paper. Next, let's go to transactions. So first transaction happened in 2010. Laszlo Henzek made the first Bitcoin transaction, paying 10,000 Bitcoin for 2 Papa John's pizzas.
Yep.
Okay, so 10,000 Bitcoin back in 2010. Today, that would buy 77% of the entire company.
Yep. If only they held on to that.
If only they held on. In 2013, IT engineer James Howell accidentally discarded a hard drive containing 8,000 Bitcoin. At the time, it was worth $4 million. That was a lot of money to discard accidentally. Today, it would be worth $800 million. Yeah. We've all heard the story of some guy lost his hard drive. He threw it out by mistake, and he wants them to go through the landfill site to find it.
Well, it even happened with one of the owners of one of the ETFs or one of the investment Bitcoin. He lost it. Or I forget what happened. He either lost or he passed away without giving the key to anyone. So it's a very tricky thing because we work in a very regulated world. We've been in securities. And although people say, there's all these scams that go in securities, it's very rare and it's very well regulated. And there's always protections in place against anything. Bitcoin is really the Wild West. And it's a lot of people, as the Wild West went, a lot of people got hurt. And that's what can happen in there because there's no regulations. If things go wrong, there's no one to save you. You can't go crying to anyone and say this isn't fair, this is unjust. If things happen, that's on you.
Volatility. So let's talk about volatility. Since 2010, there have been 15 corrections. So we're talking 15 years, basically a correction a year of 30% or more, including 3 crashes, one of 94%, one of 85%, and one of 78%.
Yep.
Now, the stock market's volatile.
Yep.
Typically, you get a drawdown of 15% or more once a year, but you've never seen a crash of 94, 85, or 78%. I think the biggest is 60.
Yep.
Despite all that long-term volatility, today, at the last time I checked, it was $108,000 US per coin. So who owns all these coins? And I thought that was really interesting when we started to look at who owns this. So public companies, they own about 3% of all coins. So those are publicly traded companies. We know what their value is. And if they own that Bitcoin, it would increase the value of those publicly traded companies. Private companies, pretty much the same, about 2%.
Yep.
So those are companies that aren't traded on the stock market, but can be huge companies. Governments around the world, 2.4%.
Yep.
They don't own very much. We talked about Satoshi Nakamoto holds about 5.2% of all Bitcoins right now. How many Bitcoins have been lost since they started these things? 17.6% of all Bitcoin have been lost.
Yeah.
That's not a pretty good track record.
Yeah.
Like, that's almost 20%.
Yeah, 1 out of 5 gets
One out of
lost.
5 Bitcoins has disappeared.
Yeah.
So everyone else owns the 12.2% or 58%. So you got governments, public companies, they own a little bit, not much.
Yep.
It's everybody else. And as we said, that everybody else is pretty concentrated. What's left? How many coins are left, Mike?
About 1.2 million are left, or about 5.7%.
So we're going to end up with about 21 million by the time it's said and done. Not much.
Yeah.
So most of the mining has been done. That was a big thing, 5-6 years ago, continuing to mine those coins. They're very expensive to mine. They use up a lot of energy.
But what happens too is the only way to make this sustain is they keep on fractioning them, right? So mining, when this first came out, if you mine it as a procedure where you clear the transactions and people try to get more Bitcoin, you get rewarded by a Bitcoin if you go in blockchain and clear a transaction. That's sort of the essential idea. And the reward, you go in a lottery to win a Bitcoin. So you and a bunch of people try to clear the transaction, and if you get a chance to win a Bitcoin. And that used to go and cover the transactionary cost because it was reasonable to the energy created, and what you got was sufficient to keep the business going. Yeah, reward. But they fraction them down now, where the rewards have become much more minor. You don't get a Bitcoin anymore. You get, because you're not going to get $100,000, right?
Right.
So it's now you get a part of Bitcoin. And what's happened as they fraction them down, it's not as rewarding as it used to be. So it gets to a certain point where it gets too expensive to clear the transactions through the mining reward. So next there's going to be a transactionary cost. So in the future, you're going to see that people to do these clearing of transactions are going to want to get paid. Everyone wants to get paid, right? It's work, it's energy. So to clear a transaction, that energy is going to want rewards. And that presents problems down the road. So it's not as smooth as it used to be.
So I look at it and I think, okay, so this sounds like a video game. We've all played some video games in our life, and so if you play this game and you're good at it, you win little prizes. Maybe you get a free second shot, or you get to keep playing, whatever it is. That sort of sounds like what Bitcoin is.
Yep.
So imagine if that's how we were getting a hold of US dollars. We'd play a video game and we could win US dollars by playing the video game, and the more we played, the more we could win. Does that sound like a legitimate business?
Yeah, but it's what it is.
It's what it is.
It's so weird. We were at a DFA conference this year, and they went and, most people get their knowledge from Bitcoins, from articles written by people who have vested interest in Bitcoins. We got to sit down and hear some of the smartest minds in the world talk about, not Bitcoin, about cryptocurrency, let's say, and how it works. And what they described it to us was, do you remember the Beanie Babies of the 90s?
Yeah.
So back in the 90s, I remember my kid's grandmother had this whole thing, a collection of Beanie Babies. And she always told us how much they're worth. There was one with a Canadian hat on it. It was worth $20,000. I looked at it, it's a Beanie Baby, right? But people were trading these online for stupid amounts of money. And they had some stupid idea that these would be worth tremendous amounts of money where they could invest in them. But after a while, what happened is the demand dropped.
Disappeared.
It just disappeared. Because the problem is anyone else can make another stuffed animal, right? Any other company in China can produce stuffed animals that for 10 cents or 5 cents that aren't going to be worth $1,000 and compete with them. And that's what's going on with cryptocurrencies, right? There was once one or two cryptocurrencies. Now anyone can create a cryptocurrency, right? And it's the idea of there's this supply-demand based economics, right? And we've always dealt in that, and we've got used to it with shortages because gold is the great idea, right? There's only so much gold you can get. And it's the whole economics of gold has been based on not being able to get shortage of supply. And they figured they'd create the same economic situation with cryptocurrency. But the problem is it doesn't work because it can always increase the amount of supply.
Next up, there's got to be some pros here, right? There has to be some advantages. So let's go through some of them. There's a potential, obviously, for a higher return. If it's at 100,000 US today, 108, there's no reason it can't go to 200,000, maybe $1 million.
Yep.
It's supposed to provide decentralization. So basically, the whole thought is that everything doesn't have to run through the government. So the minute you start getting stuff not running through the government, you get outside activities. Criminals don't run stuff through the government. They don't report their theft for the year and have to pay taxes on it. So the more that happens, the less taxes collected, the more the tax has to go up for everybody else.
Yeah.
So decentralization sounds great. Doesn't work in a country where we pay taxes to provide goods and services. Next up is scarcity. Well, scarcity, as we've talked about, there's only so many Bitcoins, which is great, but you can create new coins overnight, as Donald Trump and his wife just did.
Perceived scarcity.
Liquidity.
Yep.
You mentioned there's a limit to how many you can sell in a month.
Yep.
Well, that's not great liquidity. There's no limit to how many stocks you can sell in a month. I could liquidate my entire portfolio today in the next 5 minutes.
Yep.
You can't do that with Bitcoin.
Yep.
Well, I guess you could if you only had $10 or $100, but
large amounts.
Hedge against inflation. I'm not sure I buy that.
Anything with a 14-year track record since it's been created has no evidence of any type of. There's no economic evidence of anything. It's too short of a time frame. You need 50 to 100 years of data before you can come up with reasonable expectations of how things are going to react in different market conditions. There's zero. We haven't seen anything. Bitcoin, even though it came out in 2010, it didn't really exist through 2007, 2008. We never even heard of Bitcoin, right?
And it's really only been since COVID hit,
it's
probably
only
the last 5
really
years.
More popular, so we don't know how it would have handled those recessionary times.
So what are the big cons against Bitcoin? Extreme market fluctuations, we've talked about that. Regulatory risks, no one's really monitoring it. Now maybe Trump and his government will come in and put some rules in place. Although he's not a big believer in rules, he seems to break more rules than he follows.
Yep.
Lack of intrinsic risks, security risks, is it safe? Where do you hold it? And people know you have the Bitcoin. Are you going to be at risk?
Yep.
Environmental concerns. So those are some of the things. I guess our client's question is, should we be putting Bitcoin as an asset class in the portfolio? What's your thought?
I don't see it as an asset class. I mean, I see it as a gamble and a speculation, and we don't speculate inside portfolios.
So we do know that I think it's 3% of publicly traded companies own it.
Yeah.
So in theory, there probably is some Bitcoin if you drill deep down into the underlying holdings of each individual company. You might find that you own some coins in your total portfolio.
Yeah.
Maybe it's worth that $100 or $200 in total. But today, I still see no reason why this would fit into our client's profile. I think it's interesting to follow, makes for great entertainment, nothing more than that.
Yep.
That brings us to the end of another week. This is Rob and Mike with Think Smart from the McClelland Financial Group of Asante Capital Management.